Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for May the 26th, 2010. Now, to get started, we'll do a quick recap of what happened today with the British pound Swiss franc. As you know, I was recommending long positions at the 166.14. The market traded down overnight to 165.90, then shot all the way up to 167.63 for about 173 pip move. Now, on my own trading, I took about 145 pips on this trade. Again, we were using the predicted high and the predicted low from Vantage Point, along with the triple EMA crossover and a number of other key indicators, specifically the predicted MACD and the predicted true strength indicator, I should say. So with that said, again, I still like this trade, guys. I think we should pursue it a little bit further. Looking at this, we have this triple EMA crossover that's just taken place. We've got our key level of support, 165.36, 165.88, and 166.58 with a close of 166.68. So for tomorrow, 165.36 is again our major support level. So let's go back into the Vantage Point software and see if we can actually just repeat pretty much the same trade again for tomorrow on this pair. Now, I do anticipate a little bit of Swiss franc strength, so it wouldn't surprise me if this thing's going to pull back a little bit deeper, but that's fine. Let's nail down our predicted low for the day and we'll go from there. Now, looking at the Vantage Point software here, we can see that our low here, 165.69, and our high, 167.82. Predicted short, medium, and long-term differences are all positive. So again, we're going to let the market pull back towards the 165.69 area. 165.80 is good enough, right around that area, and then we're going to again set our buy positions. Now, to point out with this using the Vantage Point software last night, I'm in Eastern Standard Time, of course, in Canada. So in order for me to get this trade, I was using a limit order. I wasn't even actually awake when this trade came on, and by the time I had woke up in the morning, I was actually up about 115 pips. So it was a pretty easy trading day for me. But again, pointing out how useful the Vantage Point software is to me, that I can actually be in bed knowing that I have a pretty good idea where the market is going to go to, the direction of the market, and not only that, the range of the market. So my long was triggered and knocked me out with about 140 pips. It then went on to move up about another 30 or 40 pips, but that's neither here nor there. The main thing is I caught 85% of the daily range, which is a very nice trade when you look at the fact booking 150 pips in one day, one morning's trade. A lot of people can't even book that for an entire month. So pointing that out, now we've got this trade for tomorrow. Everything looks still good. Bit of a concern with this red candle right here, but again, the three main indicators, the predicted MACD, the predicted stochastic, and the predicted true strength indicator, all crossing the trigger to the upside. The one I like the best here, guys, Vantage Point zone indicator, the predicted true strength indicator, sitting just above the zero line, crossing that trigger. This looks good to me. Now, the other indicators are also very good, but I really like that true strength indicator. When it makes a cross, as you can see, it's been highly accurate. This move right here, when it crossed in a heavily oversold territory, if we look right up here, we got a move here on the pound franc from the 159 area all the way essentially up to almost actually above 170. So that's a fantastic move, and you can obviously see why I like that indicator so much. Now, we're going to stick with the Forex here. Now, looking at, people often ask me questions about the cross pairs versus the major pairs. So what we're going to do is we're going to put out another trade here, this time on the pound dollar. So it's a very similar trade, very correlated trade, but if that franc gives, if the Swiss franc gains a lot of strength, it could push the pound franc lower, but British pound US dollar could hold its ground. So what we're looking at here, we've got a fresh cross on the predicted MACD, predicted true strength indicator from Vantage Point also getting ready to cross that trigger, predicted medium and long-term differences coming out of that heavily oversold territory. So, but the main thing is we've got some resistance up here, 146.82, 144.83, and 144.18 with a close of 144.06. Now this tells me that this gap is beginning to narrow, and the 146.82 area is likely going to come under pressure very soon. I also talked about this in the Forex weekly outlook. So let's go in and look at the Vantage Point predicted high and low for the day. Neural index is down The neural index, again, guys, 24-hour indicator, a very good indicator, but a short-term indicator. So we're going to use that directional indicator saying that the pound dollar is going to go lower. When it hits this 143.29 area, we're going to use that to get into long positions. Stops here should be about 141.90 to stay out of that broker radar. Again, the predicted medium and long-term differences we can see here are coming down from 213 to 179 and 110 to 65. Predicted short term is a little volatile. It's turned slightly negative here at negative 0.44. Nothing to really be too concerned with there. So again, we're going to use this pullback 143.29 for tomorrow. We want to get into our buy positions. So those are our two Forex trades for tomorrow. Normally we only do one, but we're going to do two tomorrow, just to point out the correlation and the usefulness of those cross pairs. And for the people that don't like the volatility of the cross pairs, they can have a shot at one of the major pairs, which is fine. So what we're going to do is we're going to look at gold contracts again. Now we got a pullback to 1185. I was hoping to see the 1180, 1178 area. We didn't quite get that low of a pullback, but we're going to go back after this one again tomorrow. We can see that the predicted 3-day moving average from Vantage Point has crossed over, but it's getting ready to cross back to the upside. The predicted 8-day did not complete, so the triple EMA crossover has not completed to the downside. This suggests that gold was in a corrective phase. I agree with that. I think we're going to start moving higher on the gold contract. So for tomorrow, let's go back into that daily report from Vantage Point. We're going to use it. We're going to stay with our buy positions technically until that triple EMA crossover makes a complete cross with all of the moving averages crossing each other. Then it is not saying that gold is going lower. So we have the neural index positive again. 1190 is our target area for tomorrow. So let's use 1190, 1191 as a pullback area to get into our buy positions. Predicted short-term difference is now turned positive, 3.8 from a negative 5.9. Our medium-term predicted medium-term difference has come down from 20 to 16. Long-term still a little bit off, but the short and the medium term suggest that gold's going to move higher. So for tomorrow, we're going to be looking at again the 1190, 1191 area to get into those buy positions. Gold. Hopefully, we can get it pull back, but again, we've breached this 18-day predicted moving average. We've closed above it at 1198. So it's potential that it could pull back, hit the 1194. The former resistance could now be support. So we're going to be watching that area closely. If you start to see that market stall around that 1194 area, that also may be a good entry point. But if not, then again, we'll stick with the 1190, 1191 area. Everything should be okay for that. Now, our crude oil contracts yesterday not doing too well. And now, my concern with this is, again, the short-term indicator from Vantage Point on the light sweet crude continues to show that it's going to move higher. Now, Vantage Point is a predictive product in nature. That's what I like about it. We can see that the predicted true strength indicator is getting ready to cross in heavily oversold territory. Now, again, if I take this out over a 6-month period, just to point this out to everybody, when this true strength indicator gets down into these levels, we can see it's happened 3 times, and each time it's happened, we've moved at least $10 to $20 a barrel on crude oil. Now we're at this level again, so anybody looking trading ETFs, trading the spot crude prices, my view is still that Vantage Point, again, is not a lagging indicator, it's a leading one, and it's telling me ahead of time to be prepared for a sharp bounce higher in crude contracts. So I'm keeping a close eye on that. I still think that the crude oil contracts are a good buy where they're at right now. We'll have a quick peek at the daily report tomorrow just so everybody can see it here. Neural index is down 68.08 and 69.39. That's your range for tomorrow. I still suggest buy positions on crude as long as we're above that $66 a barrel, $65 a barrel. But for tomorrow's range, 68.08 may be a very good buying opportunity. So those are the market positions for May the 26th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.